Hey everybody, good morning. I just want to give you a quick update and let you see what's happening with rates today and how that might impact home prices over the near future. What I want to do is kind of show you what it looks like on the bond chart. Now, mortgage rates come from mortgage bonds, and when bonds go down, rates go up. Pretty basic stuff. And here's what you need to know. When bonds move, and let's just say an example of 10 basis points. So if bonds move 10 basis points, that means discount points will also move 10 points. Very simply, on a $100,000 loan, that just means closing costs would either go up or down on $100. If you had a $400,000 loan and the market moved 10 basis points, that means your closing costs would either go up or down by 10 basis points or $400. Now, a lot of times the market moves in 10, 20, or 30 basis point moves, and over the course of time, of course, it can move hundreds of basis points. So let's take a look at what it's been looking like over the last couple of months, what that trend is, and where we might be headed for interest rates for the next week or two. So I want to show you the bond chart, and you can see that the trend over since August 1st has really been with bonds going down. And again, remember, when bonds go down, rates go up. We were hoping that this Friday the labor report came out and only had 315,000 jobs created, which was right in line. So we were getting down to the support level. The market liked that and improved a little bit on Friday. But here we had on Tuesday after Labor Day, and you can see a big red candle where the market did not like the news that was happening that day. Bonds got significantly worse, and it's important that we broke below that support level. Now today we're getting a little bit of a bump, and it's going to be important to see if we can kind of rise back above and finish today above that. But I really think that long term the market is still going to be headed this direction, and we'll probably end up down here at 98. And you can see we touched that support level just a couple of months ago, and I believe we're headed back that direction. And that's going to put rates up around 6% again. So that's kind of an important level for bonds to hold. If we take a look at a longer term picture, and let me look at 6 months, you can see that we've still had this long-term trend of rates increasing. So I think that trend is going to continue. We might get a little bit of a brief support level right here, because I'm looking down here and looking at the bonds, and they're a little bit oversold. So we could have a little bit of momentum to get us above that, which hopefully would hold. But again, I think long term, we might be looking at this 98 line here. Now, let me show you, 99 to 98, that's 100 basis points. So that means if bond prices move from here to 98, 100 points, that means the closing cost on a $400,000 loan literally would just go up $4,000. And typically most people don't pay 4,000 points. They just end up taking a little higher rate. So I think that's what we're going to see happen. We'll keep a close eye on that. Now, what's that going to do to home prices? It looks like home prices are starting to stabilize a little bit. We had some really significant appreciation, 18 to 22% over the last year in Atlanta. That's going to cool off quite a bit. I think we're going to see 4 or 5% appreciation, maybe even flat appreciation for the rest of the year. And in some pockets, and if rates go up above 6, we might see home prices start to decline a little bit. We'll keep a real close eye on that and keep you up to speed as things roll out. This is Randy McMullen. Hope you have a great day. We'll talk with you again soon.